This is Nasa, aka the Real Estate Guru. I'm not your guru, I'm your guru because I actually do this business. And today we're going to talk about hard money lending because I got it asked a few times on my YouTube videos, also on the blog, and in my local market. People ask me, how does hard money, work? Where do I get it from? How much does it cost? Things of that nature. All right, so just to hop into it, you have two type of hard money lenders. You have your local hard money lenders, and you have your national hard money lenders. Your local guys are going to be guys. They only deal with select fewer people. They don't deal with everybody. They have to make sure that you know what you're doing, that you can be trusted, because a lot of things that can go wrong with rehabbing a house, and when things go wrong, people tend to change. So they have to make sure that you're a person who can keep their word, you're a person who can get things done, you're a person who can find a good deal, you're a person who can hire contractors and get things done, and that you have the money to make their payments or whatever you guys agree to. Now, me personally, my market, it took me a while to get to know these guys, to get these guys to pick up my phone calls. I'm just now getting them to pick up my phone calls and get interested in doing business with me. And some still tell me to call them, and when I call, they still don't pick up the phone. So it's all part of the business, but should not determine your success in this business. So typically, when people first getting started out in rehabbing, as myself, you have to go with the people who want more money down, or you might have to pay higher rates. So, but you have to build those relationships in your local market and find out who's doing what, and get with the movers and the shakers, and then you start doing what you're supposed to do, and those relationships will come. For example, you guys remember I made a video earlier in the year that I lost $6,000 on the deal. Some friends lent me some money that are here in my local market. They're real estate investors, and I lost $6,000, but everybody else made money. The realtor made money. They made money. They made the same amount of money as I made, $60,000. They would have made the same money, you know. So with that being said, you know, they were satisfied with me. I still have those money relationships because everybody is happy and smiling when the sun is out, but when the rain hits and they don't have an umbrella, people start to show their true colors. So everything went well. They made what they were supposed to make. I got them as referrals. They still offer me to lend money to this day. So, you know, you want to build those relationships and keep your word and things like that. So those are your local money guys. Your local money guys are going to be easier to deal with. Your local money guys, you can give them the address. Hey, I got a property at 123 Main Street, and the zip code is 12345. And they know the area, they know the zip codes, and you tell them how much you have the deal for. I have it for 50. They know it's worth 150, and they say, okay, well, I'm interested. Let me just walk the property. They walk the property. They give you yes or no right there in the spot. You know, so they're easier to deal with. Your national companies, they're going to make you pay for an appraisal. You have to, some charge an application fee, some don't. You have to show pay stubs. You don't have pay stubs. You have to show W-2s. You have to show your bank statements, et cetera, with the national guys. The local guys are very easy to deal with. So your national guys are hard to deal with, and majority of them charge you your points up front. So, but I'm going to get in a case study and explain how things work. All right. Now, when you're showing your statements to these hard money lenders, they want to make sure that if they ask for a down payment, you have a down payment. If you have money to get things, you have money to get things fixed, and because it works by draws, and I'm going to explain that. If you have money for the interest, all interest payments that they're going to hit you with, you know, they have to look for that. So that's why they ask for statements and things of that. And on a lot of the applications, they're going to ask you for like expenses, like how much are you paying this, your liabilities and all that, because they got to make sure that they can get paid, you know. So let's put yourself in their shoes, whether you're local or national. If you had $500,000, somebody you don't know from a can of paint wants to borrow $250,000, which is purchase and repair for the house they say is worth $400,000, and all you have is $500K, because some of the local guys lend their own money. So you're gonna be you want to go through that with a fine comb, a fine comb tooth. I'm sorry, a fine tooth comb. You want to go through that to make sure that these people are up and up. You want to know if these people know what they're doing, and chances are, if you don't know this guy, you're probably gonna. Oh, I'm sorry, no, I'm not interested in that deal, but thank you. Same thing with the lenders. This is their own money, so a lot of time if they don't know you, or if they don't know you, or sometimes they might be honest, they might be telling the truth. They might say, "Hey, I don't have any money to lend at this time. I'm tapped out. All my money is on the street." So because they lent it all out, so that happens. All right. So let's get into a case study of a deal, and I'm going to lower the rates and everything to make the math easier for me to do. So let's say you found a deal that's worth $300,000. Okay, you found it for $100,000, hot neighborhood. In order for you to get that $300,000 ARV, what you have to do is put 100 grand into that $100,000 property. Okay, so let's say that the lender says, you know what, I'm going to charge you 6 points and $100,000, and some of them pay your closing costs, some of them pay your insurance and all that, some don't. But I'm going to leave that out. So you might have to have money for that, depending on the lenders. I use both type of lenders. So let's say somebody says, well, okay, some of them are going to want their points up front. 6 points on 100,000 is $6,000. So some of them might want that up front. When you get the loan, you have to come with $6,000 to pay them up front, or they might just attach that to your loan. All right, let's say they attach it to your loan. $106,000, your interest rate is 10%. Okay, you're gonna end up borrowing $206,000 on your first payment of that loan, and your interest rate is 10%. We're gonna use 10% just to make the math easier for me. Typically, their rates are between 13, 15, I heard some as high as 18, but it was whatever you work out, and some of them just have guidelines. So, with that being said, if you're going to borrow $206,000, it's going to be your loan amount. Some of them might charge you on that full amount, even though you didn't get the full amount yet. Some of them might charge you on the $106,000 you borrowed on whatever you borrow. We're going to say that they charge you 10% on the whole amount that you're going to borrow, even though you didn't max it out yet. So $206,000, 10% a month, that's about $2,060 that you have to pay making payments. And on a $100,000 renovation job, let's say it's going to take you 6 months to finish, So you got 6 months of payments that you need to make, okay? So let's say you buy the property. You get your contractors out there. What's going to happen? The money you have, that the $100,000 that the hard money lender has to fix that property up, that works on a draw. You're going to pay 25 grand to your contractors. They're going to give you receipts and all that. You're going to show your lender that you spent 25 grand, and he's going to reimburse you. So that's how the draw works. You spend it, he reimburses you. You spend it, he reimburses. My lender typically doesn't like to work hard, so he'll say, "Hey, look, you need $100K in renovation funds, so we just gonna do 4 draws of $25,000. You spend $25,000, and let me know." Some of them are going to walk it. Some of them want to see the receipts. Everybody's different. Some of them want to walk the project, but when you tell them it's finished and they give you the last draw, they definitely want to walk the project. The local guys. So you're making your payment of $2,060 because that's what you're borrowing ultimately on a $206,000 house, okay? On your loan, you're paying all interest. So 6 months go past, and let me calculate that. 6 months times 2,060. I'm sorry. Let's take from start to finish. We're gonna say it's 7 months that it takes. Okay, so we're gonna say it takes 7 months from start to finish to close out, give it to the new buyer. So let's say this is a perfect scenario, saying that you went up on market first day, you got full price offer, 30-day close, everything went right. So this is saying the scenario worked out perfect. So $14,420 in payments. All right. $14,420, and just making payments. Okay, so if you got to make $14,420 for payments, you put the 100 grand into the property, so you're in at 206,000 plus your 14,420, and you sell it for $300,000. Okay, now out of that $300,000, make sure you calculate the commissions. Okay, you subtract the commissions. You're paying 6% in commission. Let's say you're paying 6%. And when you're running your preliminary numbers, you already want to go with the conservative ARV. If you get more, good. But you always want to run with the conservative ARV, and you always want to run with the 6% commission, even though you sometimes your agent might have the buyer, but you always want to go with the 6% commission. So let me just calculate that. 300 minus 6%. Okay, so that's about 18 grand in commission. Okay. So 18K in commission. So $18,000. I'm sorry, I know I got chicken scratch. $18,000 in commission that you're gonna pay out that deal. All right. So let's just tally up. Let's tally up everything. All right. So you're in at the 206,000. 206,000 plus 14, 420. Okay, 1 second. 26 plus 1, 420. Okay, so now with your payments, you're in at $220,420. Okay, so that's what you're in, and you sold it for $300,000. So let's see. Now we got 224, sold it for 300,000. Okay. Minus 220, 420. Okay. So plus remember your $18,000 in commission you had to pay. So you're walking away potentially, because this is not exact, because I did not calculate the taxes and insurance and your taxes and insurance you had to pay, and I also did not calculate it if the buyer wanted closing costs. But I said perfect case scenario. But potentially you're looking at $61,580. That's not going to be an actual number because of taxes, insurance, because you have to pay property tax for having that property for your 7 months. So you have to pay that because taxes are prorated. So that would come out of that. And your insurance. So, but you're probably looking around, 58, 59-ish, around that after everything. And you bought for 100, put in 100 and sold for $300, but after everybody gets paid, you're looking to walk away 59, 58. So typically that's how hard money works. So a lot of times people might, say, hey, I bought this house for 100. I bought this house for 50,000, put 50 and sold it for 150. In our minds, we're thinking that, oh yeah, this guy made 50 grand on one deal. No, it doesn't work like that. He had to pay 6% commission. He had to pay hard money cost, prorated taxes. Man, that guy could have walked away with like 30K from that deal, from all we know. But you have to calculate that in, and before you call a lender up, you might want to calculate that in with your repairs and everything else in, so you can make sure there's enough meat on the bone that it's worth your time, because lenders, they're investors as well, and they just have a different strategy, so they want to make sure they don't want to waste their time going after all these properties, and after you sit down to calculate the number, calculate everything, you realize that you're trying to risk $200,000 to potentially make 30 grand. You need to calculate that up front, and you need to ask yourself, well, is it worth it? You know what I mean? Can I find smaller deals to make that same amount of time and less headache and less risk? So you have to calculate all those things. I'm hoping that this video helps you out. Once again, I'm Nasser, aka the Real Estate Guru. I'm not the guru, I'm the guru because I actually do this business. Please subscribe to my channel. Go to my blog. You opt in. You will get contracts to start your real estate business, a contract and assignment. And if you're looking for a hard money lender, go to Lima One Capital, LimaOneCapital.com. I'll put that link in the description. Lima One Capital. Tell them Nasser from Charlotte referred you over there. They don't lend nationwide, but they do lend in select cities across the nation. So just you can go to their site, inquire, give them a call. Good group of guys over there. I work with some of them here in Charlotte. They're based out of Atlanta. So, but they do lend in select cities nationwide. All right. Until next time, I wish you much success in your life and in your business. I hope this video helped. If you have any more questions about hard money lending, please be sure to leave a comment. I'll try to answer it as best as I can. Thank you.